Bertille, welcome. So for those who are not familiar, Sycomore Asset Management is an asset management company, as you might expect, based here in Paris, been running for more than 20 years and is particularly focused on sustainable investment strategies. And Bertille is really engaged in the sustainability side full-time, which involves a lot of engagement with companies, speaking to companies, voting at their annual meetings and trying to push them in a more sustainable direction. And in fact, Bertille, you've just been at a company meeting this morning, haven't you?
Absolutely. So this morning, Sycomore was present at two company meetings. One, which was Carrefour, and the other one was TotalEnergies. We tabled resolutions at both company meetings, so it was fairly interesting.
So what were in these proposals, and why did you feel the need to make them?
So in a way, the two sectors, the two companies are very different in terms of maturity on the subject, in terms of intentions, and in terms of impact. We've talked a lot in the press about the energy sector, about what happened at the BP and the Shell AGMs. So Total this morning at Catherine Traoré just beforehand mentioned the AGM and the violent repression that happened outside, the fact that a lot of, it was quite difficult to enter the AGM. But actually what's quite noteworthy is the fact that our resolution, which was asking for an alignment of the company's greenhouse gas emission linked to Scope 3, so indirect emissions by 2030, be aligned with the Paris Agreement, which they aren't at the moment. And we got more than 30% support for this resolution, which is actually huge. So the last time we had a vote on an external resolution like this at TotalEnergies, it was in 2020, and we got 16% of support. So the support is growing. And then Carrefour was quite different. So we asked the company to quantify the different levers that it identifies in order to decarbonize their Scope 3, which represents 98% of their total greenhouse gas emissions. The company had a very interesting approach because the board decided to make our resolution their own, and so decided to support our resolution. And the approval was actually 93%, unchanged, word by word. And so the outcome of the vote was a 93% vote for, which is even higher than the say on climate that the company tabled last year, that only had 81% of the votes. So investors are mobilizing, are using all the tools at their disposal in their toolbox, not just collaborating through coalition like Climate Action 100+, that was mentioned before, but there are many others. But they're really trying to use whatever they can in terms of shareholder rights to make sure that their voices are heard and that companies change course.
But not all investors are doing that, right?
Not all investors, no, absolutely not. So Total was 17 investors. We tabled the resolution at NG also, so it was 16 investors. French, Dutch, Belgian, UK investors that came together. And a lot of obviously the 70 remaining % in the case of TotalEnergies voted against our resolution. And the company also had their own say on climate and say on sustainability that got 88% votes in favor. So still 88% of the shareholder base voted in favor of the company's current plans.
So if we take that vote where you got 30% support, what's going on there? Because you've got 30% of the shares under management, or the voted shares, where people like you are thinking it is in the interest of our investors to vote for this proposal. And then you've got the other 70% where they're thinking, no, this doesn't make sense. What do you think is the different approach? How is it that you're coming to one conclusion, they're coming to the opposite conclusion?
So first of all, I'm not sure everybody is asking themselves this question. There are still a lot of automatic voting out there. So either people who will vote for all resolutions in line with management, so against any external resolution that the management recommends voting against, which Total did for our resolution, for instance. And then the proxy voting agencies have a huge power out there. So there are two key agencies, Glass Lewis and ISS. And ISS recommended voting for a resolution, while Glass Lewis recommended voting against. So I think that plays a big part there. And then the other issue, I think, is that investors, asset managers, are not held to account on the way they vote. And there was an interesting initiative by the UK Asset Owner Roundtable that said a couple of weeks ago or last week that they would commission a scientific study on the way that asset managers voted, and that they would convene their large asset managers in order to hold them accountable on the way they voted on climate. So I think things are starting to move, but...
And could you talk us through why you do the things that you do? If we think about, the traditional approach to asset management, it's simply, you purely look at what's going to give the best financial return over the specified time period, and that's it. I don't think it's as simple as that for you, right? I mean, what is the approach to investing that you pursue, and why do you think it's good for your customers?
How do you calculate the best financial return? It all depends on the hypothesis you put in your model. And if you listen to what the IPCC is saying, is that by around 2030, we will already be beyond the 1.5 degrees Celsius with, and the sort of the intensity, the depth, the longevity of us going beyond that threshold will have irreversible and dramatic impact on our ecosystems. So I think it depends on what the growth rates that you use and the levels of profitability and free cash flow generation that you use in 2030 or in 2050. And obviously, you cannot. It's very difficult today to predict the dramatic impact that climate change will have. And we're doing that firstly to make sure that we preserve the long-term value of our investments. I think that's a key part. And then the second point is, as was mentioned in the panel before, we're not moving fast enough. Emissions keep on rising, so we have to find new ways to use our voice as shareholders in order to influence companies to change course.
And if you look at the retail investor base, the potential customers, so some retail, some institutional, but even for the institutional investors, they're ultimately typically accountable to individuals in one way or another. So if you look at how individuals want their assets to be invested, how much do you think people actually really do care about this? Because there are definitely some people who care a lot and who are willing to give up some financial returns potentially. If, for example, the oil industry is going great, they still say, no, I don't want to have any exposure. But there are others who say, look, I've got my children to think about, I've got my old age, my retirement, I just want the best financial return. What's the balance? How much do people care about the climate?
So the French Sustainable Investment Forum does a survey every year whereby they go out in the street, ask people, tell people about sustainable finance, ask them whether they know about it, and then explain to them what it is, and ask the question again, would you want to invest, how much, etc. And the response is actually, and the gap between the money actually invested in those sustainability linked products and what people would want to invest if they knew about it or if they had the right channels in order to invest their money in it is huge. So it varies slightly, but it's around 5% of people, between 5 and 10%, who actually have savings in SRI funds. But it's more than 70 or 80% who would actually want to have such investments. So yeah, then there's a question about the short-term conflict between financial returns and sustainability, and it's been quite. You can find studies on that subject that tell you very contradictory things. Arguably, the landscape has been a bit tougher last year in 2022 with the outbreak of the war in Ukraine. Oil and gas companies performing extremely well, where they were absent of the defense sector also, while they were absent of many SRI funds. But in the long term, I think the returns are there and it's not contradictory to financial performance.
Yeah, so to zoom in on that, just the question of trade-offs, because I think it's important. As you say, last year, if you were invested in oil companies, you were really having a great time financially. It's astonishing profits in that sector, and if you excluded them, then you looked much less strong. So that's one example of where there was a trade-off last year. But do you really think that there's a perfect alignment between what's good for the climate in the long term and what's good for people's financial performance?
In the long term, yes, but in the short term, no. There are, and I think people are not saying that enough. I think it's impossible today to make such a statement and say that short-term financial performance is aligned with environmental, social, and corporate governance goals. So, yeah.
Yeah, I mean, one thing I would argue is that unless and until we have a real effective price on carbon, you will always be penalizing the less carbon-intensive companies relative to the more carbon-intensive companies who get the right to pollute effectively for free in many cases. And that's a market failure. And until you address that market failure, you're going to have a problem. I hope that will be fixed eventually. We were talking in the last section about how much the private sector can do on its own and where you need regulation to come in. What sorts of new regulations or policy moves from governments would you really want to see that could enable the investment industry to do better?
Well, I think the price on carbon is a good point, because actually most hypotheses that are used by companies today are around 100 euros per ton. And there was an interesting report written last year by, a couple of years ago actually, by France Strategy. That I haven't seen these numbers anywhere else, so don't think they've been used much. But the price on carbon that they used for 2050, that they recommended the public authorities in France to use, were between 600 and 900 euros. So you see the massive gap there. So that's one way to incentivize wiser investment decisions, because it's a key part of the investment decisions you're going to make and how you're going to discount your project and decide on the go ahead or not. So,
in the meantime, in the absence of an effective price on carbon, you have options as an investment company. You can, the most obvious one is you can either choose to hold or sell your stakes in companies that are not doing well enough. And there's definitely a big school of thought, and there's a lot of people on the activist side of things who say, look, you should divest. You should not be holding shares in Total, for example. Clearly, you've decided the right approach is to hold those shares and to use your votes and your shareholder voice to try to push for change. But why not just say, look, Total is polluting the environment, we're out?
I think it depends on the intention behind your investment in companies like Total, for instance. And not that this whole panel was going to be about Total, of course. But if you decide to hold your shares in order to ask questions, in order to engage, because we haven't talked about the spectrum of the engagement toolbox, so you can have dialogue behind closed doors, by yourself, through collaboration. You can ask companies questions at the AGM, written or orally. You can launch public campaigns also, try to mobilize other parts of the ecosystem, or even advocate and lobby public authorities. But divesting, you don't hold the seat at the table anymore. So for me, I'm not sure that the divestment movement has shown that it was a force for change. And today we need to change. And so coming back to my point about the intentionality of your investment, if you invest in order to engage and not just for financial returns, then I think it's a perfectly valid strategy today. And you don't have to divest, because let's be completely clear, there's a consultation in France about the French SRI label at the moment, for instance, that recommends divesting if after 3 years there are no results to the engagement asks that were made 3 years prior. You're not going to change a business model in 3 years. It's completely impossible. So unless you ask about disclosure requirements or about maybe something a bit less meaningful to the way the company generates profit, fine. But that's not really what we want to change when we talk about the oil majors, for instance. So it needs to be, the time needs to be much longer, and we need to be invested in order to use our voice and our shareholder rights.
And it raises this larger question of what we want to happen with the oil majors. You know, BP, Total, do we want them to go from oil and gas giants to being renewable energy giants? Or do we actually want them to slowly disappear and be replaced by a new generation of pure play renewable energy companies?
Well, the strategy is multi-energy, which is, there's nothing wrong with this strategy. But now it's about the pace of change. And about, you know, what do they do in the short term, where there are these massive profits, and how do they reinvest those profits? Do they give it back to shareholders and ask shareholders to actually do the reallocation themselves? Or do they invest in renewable energy? Do they continue investing today? If you look at the capex of Total again, most of it is going towards oil and gas, and they invest as much in new projects as they do in renewable and low carbon solutions. So 5 billion per year.
So perhaps we should be somewhat conservative in our expectations for how far they might go, because the business incentive.
What we want today is a plan B, at least. There's a strategy, so, you know, growing gas and not capping emissions on scope 3. But, you know, what does it tell you? The score this morning, 30% of the investors actually want the company to work on a different strategy, maybe, that would accelerate the transition.
Well, 30% this year. We'll have to see what happens next year. Perhaps you might get over the magic threshold, but we'll have to leave it there. Thank you so much, Bertille, for a wonderful conversation.
Welcome.